Hey there! Are you ready to dive into the thrilling world of highly rewarding investments? If you've ever dreamed of owning your slice of the real estate pie, but didn't know where to start, you're in the right place. Here, I'll outline 8 critical factors that will help you navigate the real estate market with confidence and ease, no matter where you are in the world. After watching this video, I hope you will be able to make wise real estate investments that will yield high returns by applying the 8 secrets I will share with you. After careful research, analysis, and insights I garnered, the first point on my list I would like to share with you is market research. It's important that you get great knowledge and insight to what you're going into, as it's the first step to taking your investments to the next level. Market research is like having a treasure map in the world of real estate investment. It's your guide to uncovering hidden gems and avoiding potential pitfalls. Market research helps you understand the lay of the land. Just like exploring a new territory, you need to know what's happening in the real estate market before diving in. By analyzing trends, demographics, and economic indicators, you gain valuable insights into property demand, pricing dynamics, regulations, and investment opportunities. But it's not just about the big picture. Market research also helps you zoom in on specific neighborhoods or property types. You can identify emerging hotspots, uncover hidden gems, and assess the potential for growth in different areas. It's like having a crystal ball that helps you predict where the next big real estate boom will happen. But here's the really exciting part. Market research isn't just about numbers. It's also about people. By understanding the needs, preferences, and behaviors of potential buyers or renters, you can tailor your investment strategy to meet their demands. It's like having a secret weapon that helps you attract the right tenants or buyers and maximize your returns. So, whether you're hunting for your next investment property or looking to unlock the full potential of your real estate portfolio, don't underestimate the power of market research. It's your roadmap to success in the dynamic and ever-changing world of real estate investment. The second point on the list is financial stability and risk tolerance. In real estate, making smart investment choices means thinking about 2 main things: how much money you have and how much risk you're okay with. Firstly, you need to look at your finances. That means understanding how much money you have coming in, how much you spend, and what your overall financial situation is like. This helps you figure out how much money you can comfortably put into real estate without putting yourself in a tough spot. Then, you have to think about how much risk you're willing to take. Risk means the chance that you might lose money. Some people are okay with taking big risks because they want the chance to make a lot of money, while others prefer to play it safe and avoid big risks. When you're considering a real estate investment, you need to do your homework. It's all about understanding your finances, knowing how much risk you're comfortable with, doing your research, spreading out your investments, and being careful with how much you borrow. By paying attention to these things, you can make smart decisions that help you reach your financial goals. The third point on the list is the regulatory environment. The regulatory environment in real estate is like a set of rules made by the government to make sure everything in the real estate world is fair and safe. These rules cover many things, like where buildings can be built, how they should be built, and how they impact the environment. They also make sure everyone has equal access to housing and protect renters from unfair treatment. For example, zoning laws decide what kinds of buildings can go where, like residential areas or commercial zones. Fair housing laws make sure nobody is discriminated against when it comes to finding a place to live. Real estate professionals, like agents and brokers, have to follow certain rules too, to make sure they're honest and fair in their dealings. Taxes are also part of the picture, with property taxes based on how much your property is worth and capital gains taxes on the profits you make from selling property. In simple terms, the regulatory environment in real estate is all about making sure things are done fairly, safely, and responsibly in the world of buying, selling, and renting property. The fourth point on the list is location. Imagine you're picking a spot for your dream house or a place to invest your money. Well, location is like the superhero of real estate. It's the big deal maker. Here's why. Firstly, think about what makes a place awesome. Maybe it's being close to cool shops, good schools, or parks. Well, those things make a location desirable, and when a place is hot, property prices go up. So, if you buy a house in a happening neighborhood, it's like winning the real estate jackpot. But here's the really exciting part. Over time, property values in great locations tend to skyrocket. That's because everyone wants to be there, so demand keeps going up. It's like owning a treasure chest that keeps getting fuller and fuller. And get this, even when the market gets a bit wobbly, properties in awesome locations stay strong. It's like they have superhero powers against market crashes. But it's not just about money. Living in a fantastic location means you're close to all the fun stuff. Whether it's cafes, parks, or trendy shops, you've got it all right on your doorstep. So, when it comes to real estate, remember, location. It's the superhero that can turn an ordinary property into a superstar investment or dream home. Choosing properties in prime locations with strong fundamentals is essential for maximizing investment returns, minimizing risk, and building a successful real estate portfolio. The fifth point on the list is property type. Choosing the right property type is like picking the perfect tool for a job. It can make all the difference in your real estate investment journey. Different property types offer different ways to make money. Imagine you're choosing between residential properties like houses or apartments and commercial properties like shops or offices. Residential properties can give you rental income from tenants, while commercial properties can bring in rent from businesses. So, deciding on the right property type sets the stage for how you'll earn money from your investment. But it's not just about making money, it's also about managing risk. Some property types are more stable and less risky than others. For instance, residential properties tend to have fewer ups and downs in the rental market compared to commercial properties, which can be more sensitive to economic changes. Understanding the risk level of each property type helps you plan for the long haul and avoid nasty surprises. And let's not forget about the future. Different property types have different potential for growth in value over time. Some, like residential properties in trendy neighborhoods, might see big jumps in price as demand keeps rising. Lastly, managing your property type is like taking care of a garden. It needs the right attention and care. Residential properties might need more hands-on management with things like tenant turnover and maintenance, while commercial properties might need more focus on leasing and tenant relations. Understanding the unique needs of each property type helps you keep your investment thriving and growing. So whether you're dreaming of owning a cozy rental home or a bustling office building, remember that choosing the right property type is like setting the stage for success in your real estate journey. The sixth point on the list is economic climate. Diving into real estate investment is like embarking on a thrilling adventure. But before you set sail, you need to understand the economic climate, which is like the weather forecast for your journey. The economic climate is like the weather forecast for the real estate world. Just like you check the weather before heading out, you need to know what's happening in the economy before diving into real estate. Why? Because it directly affects how the market behaves. When the economy is booming, people are feeling confident and are more likely to buy or rent properties. But when things are shaky, they might hold off, which can impact property prices and demand. The climate of a region directly affects the suitability of properties for certain uses and the comfort of occupants. For example, properties located in regions with mild climates and pleasant weather conditions may be more desirable for residential living, vacation homes, or outdoor recreational activities. On the other hand, properties in regions with extreme climates, such as extreme heat, cold, or frequent natural disasters like hurricanes or wildfires, may face challenges in terms of habitability, maintenance costs, and insurance premiums. Climate also impacts property use and functionality. For example, properties in areas with abundant sunshine may offer opportunities for solar energy generation or outdoor recreation amenities, enhancing their value and appeal to buyers or renters. Conversely, Properties in regions with limited sunlight or harsh weather conditions may have restrictions on certain outdoor activities or require additional investments in climate control systems. Understanding how climate influences property use and functionality helps investors identify opportunities for value enhancement and differentiation in the market. So, as a beginner in real estate, paying attention to the economic climate is like having a secret weapon in your toolkit. It helps you understand the market, spot opportunities, and stay ahead of the game. Number 7 on the list is property condition. Property condition matters a lot for new real estate investors. If a property is in bad shape, it can cost a lot to fix up, eating into your profits. But if it's in good condition, you can make more money from renting it out or selling it later. Plus, nice-looking properties attract tenants and buyers faster, so you don't have to wait as long to make money. However, ignoring problems with a property can lead to big headaches and expenses down the road. So, for beginners, focusing on properties in good condition is key to making smart investments and avoiding costly mistakes. Another big reason why property condition matters is because it affects how much money you can make. If a property looks nice and is in good shape, you can charge higher rent for it. This means you'll make more money each month from renting it out. Plus, if you decide to sell the property later, you can usually get more money for it if it's in good condition. People are willing to pay more for a property that looks nice and doesn't need a lot of work. But if a property is in bad condition, it can be harder to find tenants or buyers. Nobody wants to live in or buy a place that's falling apart or looks run down. So properties in good condition tend to get rented out or sold faster. This means you won't have to wait as long to start making money from your investment. In short, for new real estate investors, focusing on properties in good condition is key to making smart investments and avoiding costly mistakes. It can save you money up front and help you make more money in the long run. So always take the time to check out the condition of a property before you decide to buy it. Brace yourselves because our final point is a game changer that's bound to leave you speechless. But before we dive in, show your support by smashing that like button and subscribing to join our community. Now let's uncover the shocking truth of our last point. Last in line, yet equally important, is exit strategy. An exit strategy in real estate is like having a game plan for when you're ready to say goodbye to a property you've invested in. It's like knowing your next move in a game of chess. You want to make sure you're making the smartest move possible to win. So whether you're looking to sell a property for profit, rent it out for a steady income, or even pass it down to the next generation, having an exit strategy helps you navigate the real estate world with confidence and clarity. Picture real estate investment as a thrilling voyage across the seas of opportunity. Just like sailors need a map and a plan, investors need an exit strategy to navigate safely and make the most of their journey. If market conditions suddenly take a turn for the worse, having an exit strategy in place can prevent investors from getting caught in a financial bind by enabling them to sell or refinance the property before it's too late. Moreover, having an exit strategy in place provides investors with peace of mind and confidence in their investment decisions. Knowing that there's a plan in place for when the time comes to exit a property can alleviate stress and uncertainty, allowing investors to focus on other aspects of their investment strategy. For example, a real estate investor who intends to hold on to a property for rental income may develop an exit strategy that involves selling the property once it reaches a certain level of appreciation or generating a specific amount of passive income. This forward-thinking approach helps investors stay on track toward their financial goals and ensures that their investment journey is as smooth and successful as possible. Thanks for tuning into my video today. If you found this video helpful, don't forget to give it a thumbs up, share your thoughts below in the comment section, and subscribe to our channel for more valuable tips and insights on Real Estate Investment Guide.